From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Greetings everyone, this is Houston, and welcome to the 8th episode of Trading Edges, brought to you by thetradingedge.org. As always, thank you so much for tuning in and listening to the show. First off, I just want to acknowledge all the listeners who have written in. I sincerely appreciate your feedback, and as always, we've got plenty of great interviews lined up, so stay tuned. Now, if you liked this podcast or if this podcast serves you, please help us by leaving us some positive feedback on iTunes to help others find the show and help us continue to grow and find great guests. Now, in this episode, I interview Adam Grimes. Adam's a fellow podcaster, seasoned trader, systems developer, author of a great book that I often recommend called The Art and Science of Technical Analysis, and the CIO of Waverly Advisors. Now that's a mouthful. But beyond all of that, what I respect most about Adam is the amount of work he contributes to the trading community. And you hear more about that in the show. Now, another sneak peek in this interview with Adam, the conversation goes deep and wide. So here are some of the big ideas. Number one, why it's not enough to learn how to trade, but rather it's learning about how to become a trader. Adam shares some great tips around the realistic expectations for new traders. Thirdly, why it's important to understand the distinction that you're not actually trading the market, you're trading against other traders. The importance of carrying the right trading mindset. Fifthly, how even purely quantitative traders are not exempt from trading psychology. Adam in the past has talked on other shows about his views on meditation, and he shares his views both positive and negative on meditation and what it can do for traders. I then asked Adam to share his own meditation practice. He shares with us what he does day in, day out, and gives us a great practice to improve focus. Pay attention, intraday traders. Talks about the importance of living through various market cycles, and lastly, we get a little deeper around what we're really seeing when we look at a chart. So, if you want to find a lot more, you can find the show notes and the transcript at thetradingedge.org/episode 8. Now, on to the interview. Hi, Adam. Thanks for joining the show today.
Thank you. Great to be here with you.
Absolutely. It's a real pleasure to have you on the show. I've been really excited today, actually, to get a chance to talk to you, as you're one of the authors of one of my go-to books around technical analysis.
Thank you.
For folks who don't know of Adam's work, your most recent book is a book called The Art and Science of Technical Analysis. And why don't we start there? So I'm curious, why did you call it The Art and Science of Technical Analysis? Why not just the science of technical analysis?
Well, I went through a lot of writing a book. Selecting the title is one of the most grueling aspects. And so I went back and forth on a lot of titles, and I realized that one of my editors liked the idea of signal and noise. Because he said what the book really was digging into was how to sort through all of the noise in the market and pull out something that was tradable. And I said, yeah, that idea really, that's true, but I think that's a little bit, that implies a little bit more of a quantitative approach than I was advocating in the book. And then that sort of launched me into thinking, there's an art to this, and we talk about that. There's an art to trading, but the art has to be based in reality and disciplined with the statistical rigor of what happens in the market. But as a discretionary trader, and certainly we can have that discussion about the spectrum of different ways that people can trade. But as a discretionary trader, there is a certain aspect of art. So that was what really intrigued me about halfway through writing the book. And the first draft was done in months. I wrote like a crazy fiend.
Wow.
I really started focusing on that idea and thinking about that idea, and so it just. I guess I realized that was kind of had been my approach to the market for many, many years. I just never articulated it in a phrase quite that clearly.
Yeah, well, we can unpack that idea further because, as we start talking more about trading, I think there's the misconception, especially by new traders, that you can kind of learn trading by rote, where you can just pick up the setups and just apply them mechanically, and that you'll become successful after a given number of trades. But I think I've heard you speak in the past that you have various opinions about the journey of traders, and we can explore that in a few moments.
Sure.
But let's take a step back. Let's talk about your background. I just introduced you as an author, but Adam's a lot more than just an author. Why don't you just quickly give us a little snapshot of your background and what you're up to nowadays? I know you have a blog and a podcast, but what else?
I think my path to trading was a little bit interesting. So my formal education, I was a musician, classical composer and keyboard artist, pianist, harpsichord, pipe organ, clavichord. So I was very heavily into music, and I started trading almost by mistake and had no clue what I was doing, just thought it would be something that was fun to try. And something about the process and the patterns and my own psychological responses really grabbed me and said, this is where I need to focus a lot of my time and energy. So I went through the process of figuring out how to trade, and that was a journey in itself, and I don't think that anybody ever finishes. It's a constant process of refining and learning the kinds of mistakes you're susceptible to. And I think by this point, I have a lot of those kinks ironed out. But it's an ongoing process. Yeah. And so, as you said, I've written a couple books. The Art and Science of Technical Analysis is the big one, and that's kind of it's a big book, but it's a very specific approach. I hear people talk about it being an encyclopedia of technical analysis. I don't think that's true. I think it's what I advocate is a rather simple approach to markets, which is the idea of two forces, momentum and mean reversion, and we're trying to tease out somehow patterns that point out when one of those forces is more likely to prevail in the future. So should I be approaching this market looking for mean reversion, looking for it to snap back, or should I be looking for continuation? Other projects, I write a blog. I also have a podcast where you can listen to me ramble on various topics related to financial markets, and some not. I've done some things that are kind of interesting in the aspects of human performance, meditation, how to improve memory, how to improve learning. I'm the CIO of Waverly Advisors. I write and publish research every day. We look at all the liquid markets. So, I am involved in markets and in the process of communicating about markets in many different ways, and it's very exciting to me.
Adam, I think you're being very humble. So I know you're super productive. So obviously, you're putting out a great bandwidth of work. So I just want to first off just appreciate you and show you some gratefulness for the quality of work that you're putting out there to serve the trading community. But you mentioned some interesting points there around the forces of momentum and mean reversion. So to talk us more about your trading background. So I know in past interviews you've talked about kind of your journey from basically knowing nothing to losing a bit of money, then losing a bunch of money, and then kind of figuring things out along the way.
Right.
What's a realistic expectation for a trader when they're first getting started? Because I speak to a lot of new traders like you do, and unfortunately I think sometimes there's a bit of disservice from the financial community in that they see a lot of commercials with guys sitting on beaches drinking martinis or sipping mojitos, Right. They think that's going to be that easy from the get-go. So what's your opinion on that?
Well, I think the sitting on the beach sipping martinis. For instance, I just got back a month or so ago from a multi-week trip in France where I was basically eating my way through a big part of France. However, you're never really on vacation if you're involved in markets. And I wrote my research every day. I did my work every day. There were times where I was checking market prices because there were some things happening. I was checking market prices multiple times a day. So I think if you're going to do this and you're going to be successful, I think it has to become a part of who you are. And, like I say that to a lot of people, and I describe my, quote, vacation like that. And they're like, oh, man, you really need to get away. You need to be able to turn off. Well, I don't think, for instance, if you're an artist, and I'm not making some high-minded comparison with financial markets and being an artist, but, if you're an artist, if you're a painter, you're always looking at things with a painter's eye. If you're a musician, you're always turning pieces of music in your head. You're always thinking about how to fit things together. And so I think if you're involved in financial markets, it is a part of who you are, and it's a part of how you think, and it's kind of always there with you. So I think the idea of getting into the markets to find some system that's going to make you a lot of money, that's just not really realistic. It's going to be a process of you figuring out how to extract money from the market. And by the way, just for purposes of this interview, actually everything, I will kind of mix the word trading and investing. So, and I know a lot of people, there's a lot of prejudice on both sides. Like a lot of traders will say, oh, investors don't know anything. They just buy, they just buy and then magically have a lot of money 30 years later. And investors say, traders are stupid. They spend a lot of money on commissions. They don't actually make money. But to me, it's that process of trading, which means you're making a decision to take some risk in a financial market, and you're going to take that risk off at some point in the future. It may be when you retire. It may be later today. But it's still that. So just so you know, I'll speak about trading and investing as kind of being the same thing. And I think as you work on becoming a trader, as you work on being able to manage the risk and to understand the risk, this is going to be a journey that is going to take a minimum of 3 years. And it's not a get rich quick scheme. It's not learning how to trade. It's becoming a trader. Right. It's learning how you will become a trader. 3 to 5 years is probably realistic, and this means that you are losing money. And at some point, your first stage of success is you stop losing money, so you're breaking even. And that's breaking even, but you're still paying data charges. You're probably losing money on commissions. You're losing money on maybe some education, maybe some research. So you're net negative. This idea, I knew lots of people. I've seen lots of people try to do this through the years. And one of the big mistakes you see people make is they save up a decent chunk of money. And it's hard to talk about because what's a decent chunk of money, but let's say somebody saves up a year's salary and they put it in a trading account, and they're going to pay their bills, their insurance, their health insurance, their car, their house, all their utilities, and they're going to eat out of the trading account and they're going to trade. That's not the way this is going to work. Right. And one of the problems is, yes, there's somebody somewhere in the world that has been successful that way. And it's always possible to point to the outlier. But I really think what we need to do, and if we're going to teach people about trading and we're going to teach people how to trade, it's what do you need to do to give yourself the best chance of success. And that doesn't mean you're not going to plan to be the outlier way, way out alone on the tail of the distribution. So you're literally the 1 in 10,000. If you want to play that game, go buy a lottery ticket.
Exactly.
It's a lot simpler, and your risk reward is probably a lot better. But what you need to do is, okay, what can I do to give myself the best chance of being successful becoming a trader? And it's 3 to 5 years, and it means losing quite a bit of money, and it means doubting yourself, and it means, I talked to a lot of people. I talked to somebody earlier this week who said, man, I'm so discouraged. I think I'm going to quit this. I'm just not cut out to do it. Well, what's going on? Well, I've been trading for a year and 3 months, and I just can't make money. It's like, I all I can do is cover my commissions. I said, well, you are so far ahead of the game there.
Doing great.
Yeah, congratulations. That's
Yeah.
success. And I think that's why it's not that I want to dump a giant bucket of cold water on anybody's expectations and say learning to trade sucks. It's going to be really, really hard. I want you to know what success looks like. And the first stage of success, which may take years, is when you stop losing money. And if you go into it with that, then I think you're in a very different place mentally, and you're more prepared.
Yeah, absolutely. Well, that's a great answer, and there's so many layers to what you said there. When you were saying that, I was just thinking about the traditional learning, or I guess the curriculum or the education for a trader, however you want to describe it, and even like I know you've written stuff around super learning, and there has to be an element of fun, right? Like if unfortunately, it can't all be fun, but in the beginning it has to be a bit of fun. But I think a lot of people, they come in with like you said, the wrong expectations. And they don't give themselves enough time to really find their groove. Either they're undercapitalized or they just have, the wrong type of pressures on themselves to get where they need to go. And then they can't really ever find their groove. And like you said, they end up unfortunately being one of those casualties.
Right.
So,
well, that aspect of fun, I think that is important, because one of the things that I have talked about and written about a lot is the right mind state matters a lot.
Yeah.
Whatever there's an old saying, I think maybe it comes from Napoleon Hill, something like, I'll get this wrong, but a man becomes what he thinks about all day. So, the idea is that whatever is in your head all the time, that's what you're going to move toward. Yeah. And I think what really happens is it's like your brain is almost able to optimize itself for some kinds of learning.
Right.
Like if you, I'll tell you kind of an interesting thing. Like when I was a musician, I would take all these standardized tests, and for some reason I always had the skill of taking standardized tests, which some people don't, but I would consistently score much higher on the linguistic side than the math side. And theoretically, if you look at a lot of learning theory stuff, people are in one camp or the other, and you can't change.
Yeah.
And so because I had none of these quantitative tools, I went through the process of teaching myself all of the math that I needed to know to learn to trade. And I spent many, many hours on the sofa with a book, learning calculus and statistics while I watched episodes of 24. I don't even remember what I was doing, but probably some really poor multitasking. But one thing that I saw then when I would take standardized tests, my brain had changed so that my optimization was mathematical.
That's interesting.
And that's supposed to not be possible. But, I also saw it as a musician, and I saw it with a teacher of musicians, that the students who learned really, really well were not, everybody thinks, oh, kids are sponges, they soak things up. Oh, there's some truth to that. But really, I think maybe more than anything, kids play. And a kid will approach something with this sense of play and with this open wonder. And I think if we can replicate some of that as adults, this can't be drudgery. This can't be something that you hate. It has to be something that you're excited and that you have a very positive attitude toward. And then, if you take this a step further and you think about what you were just saying, there are a lot of traders who get in a very bad place mentally. Yeah. They lose some money. They think they're a failure. There's a lot of personal worth, impressions of their personal worth tied up. Maybe they have conflicts with family. They're worried with what their friends are going to think. And so you get all of this emotional garbage and junk that just makes it very, very difficult to learn. And you have to kind of work to achieve this state of clarity and this state of play. And on the other hand, it is hard work, and it takes a lot of time, and you have to be tough. You have to be resilient. But it's having that right mindset, I think, is very important.
Absolutely, and you just said it so well there. I've always looked at trading as being kind of one of the, if you're willing to do it, then I think trading can be one of the most powerful self-development tools. If you're actually willing to take, the feedback that the markets are giving you and that your account's giving you,
right?
And you're really actually willing to, do the inner work that's required, and then take that and make the changes inside yourself. Then, like you said, then you can begin to build the right mindsets, the right type of beliefs, the right type of, decision-making practices to help you become a better trader. It's not going to make you a good trader, but at least it'll it'll be conducive to good trading.
Right. And I have sort of I think there's a lot of stuff that is told to people psychologically, which that's a very poor sentence I just spelled. But you know what I mean. I mean, like it's imagine the situation. Imagine that I sell you a system that doesn't work, and then it doesn't work, and you struggle with it. And I say, well, you just need to get your psychology right. Go work on yourself. You're the problem. I can't tell you how many times I've heard when I've tested some tool statistically and found no edge. Well, the response is, well, you just have to figure out how to make it work for you. Well, should I say that about tarot cards or the magic 8-ball or flipping a coin to get trees? You just have to figure out how to make it work for you.
Right.
And, if I give it to 100 people to work for somebody, and I can say, see there, that person figured out how to use the random coin. So I think we do a little bit of a disservice. I think it's very, very important. And if there's one thing that separates my work from a lot of the other thinking, I think it's that emphasis on you really have to have an edge.
Yes.
And I think a lot of psychological problems come from trading without an edge.
Yeah.
And it's kind of like you get in this feedback loop. If you're doing something that doesn't work in the market, you should not feel good about it psychologically.
Yeah.
So you actually can address some psychological issues by addressing some methodological issues. But on the other hand, you can have a system that works very, very well. Somebody could tell you exactly how to trade, but you're completely not able to implement it because of your psychological issues. Yeah. And so it's a little bit of a chicken and an egg thing. But I think there's another mark, and I'm not big on a lot of these market sayings. I don't know why I'm bringing these out here, but there's another one that says if you don't know who you are, the market's a very expensive place to find out. And I do think that one of the things that I did, and I think a lot of traders should do, is you need to do some hard work on yourself. Right. And I don't know what that looks like. Maybe it's you go on a walkabout somewhere for a few months out in the wilderness if you can afford to do it. Maybe you spend time in some spiritual practice. Maybe you see a therapist. Maybe you do journaling, so you're kind of your own therapist. But I think that we really do need to be very comfortable with who we are in terms of risk, work ethic, attitude toward money, what sets you off. We all have triggers, and then you need to work toward developing this awareness of your state so you can just, for instance, like a day trader who maybe freaks out when he gets stopped out to the tick. And so then that day trader is vulnerable to making other stupid revenge trades to try to get the money back. And he learns this. So what does he do? Well, he somehow breaks the pattern. It can be something silly like putting the rubber band on your wrist and snapping the rubber band. It can be as simple as getting up, take a walk, make a phone call. So you learn to kind of interrupt your own destructive patterns. But it is, I think that's a really fascinating aspect. And I don't think anybody has a firm answer to, where is that sweet spot? Where's that intersection between psychology and methodology? And, even if you are a purely quantitative trader, you still have some psychological issues because you have to turn the system on, you turn it off, you decide what to back test, you decide when it's ready to go, you decide on risk. You're still making a lot of decisions. I think a lot of people want to become quant traders because there's the idea that it removes it removes the human equation. Let's not kid ourselves. You're still a human. You're still going to have some inputs. Yeah. So it's like how do you figure all of that out?
And there's so many ways we can unpack what we just talked about there. I guess the one place I would ask you a question first is, so I talked to some new traders. A lot of them had this exact same question. They're like, okay, well, where do I start? Sounds like I don't need to start with the psychology first because I'm brand new to trading. I don't think I don't have that much baggage yet. Where do I go get a proven system with a real edge? Do you have any advice for people to say, all right, if they're interested in let's say trading, not investing, but let's say trading on a swing trading basis or an intraday basis, where would you recommend someone actually go off and find a system? Would you advise they build it themselves, or where could they find something that's reputable or at least proven or something like that? Well,
let me give a shameless plug for a couple of things that I've done here.
Sure.
So First of all, I have put out an extensive trading course, and you can find it at adamhgrimes.com/TAAS, the art and science, just TAAS. You can also find it from my blog. It might be an easier way to find it. And that trading course is completely free, and it addresses this question that you just asked.
Yeah.
I make an effort to, and I'll tell you something very exciting and timely with the trading course. I make an effort to give people all of the tools they need to, it's like you have to be shown, here's how the market usually moves. Here are the things that happen in the market. A lot of times these are the patterns, but now how are you going to execute them? And this course walks you through that. It walks you through developing your own system and backtesting that system, verifying that system, and how do you build intuition around the patterns at the same time you're really understanding the numbers and the quantitative tendencies. So I think that is a great resource. That's, frankly, the research that I publish with Waverly Advisors, we have many clients who are developing traders, and I think that this is, with everything I do, I try to create what I wish that I had had when I was learning. And I put so much out, and I'll tell you up front, for free, and the research is paid. But that's an applied thing where you have all these theoretical concepts, but you see, it's not theoretical when you're short crude oil and it rallies against you 5 standard deviations in one day. That is not a theoretical situation. So how do you deal with that situation? And that's what the research gives you a chance to see every day, me talking about markets, me looking at markets and seeing how the risk evolves and talking about everything in context of the systems. And the exciting thing about the trading course, this is a project that I've been doing for quite some time, and there are, I don't even know, there's something like 30 hours of video and hundreds of pages of exercises. And I will tell you, I'm bringing in some outside voices, some people who are experts on quantitative trading, options, psychology. So very soon there's going to be a lot of new material there that takes what I have done and really drills down deeper into some of those concepts. And I will be announcing within a day or two the first piece of that, the quantitative module is going to be launching. So that's very, very exciting. And we'll have some people who are luminaries in their fields talking about specific areas. So I think that's a great resource. And there certainly are other resources, but it's really, as far as something that will show you how to do the work yourself while also giving you an edge. It's a little bit difficult to find, that there's not a lot out there. There are a lot of magical systems.
Yeah.
There are a lot of systems that are too simplistic and they just frankly don't work. There are a lot of, candlestick newsletter, Fibonacci newsletters, and I don't think those things, I can't find an edge in those things, and they tend to go away after a few years. It's kind of the cycle of things. And that's one advantage we have after being involved in the market for a few decades. You get to see a lot of things come and go, and it really, for the person coming in without that perspective and figuring out, there's so many noisy voices. Who do I listen to? Where do I focus? You only have so much bandwidth. You can't do everything. Where do you focus? It's hard to know. And, I've certainly tried to do what I can to maybe point some people in the right direction.
Well, I think you've done an amazing contribution, and thanks for sharing with the audience early, this kind of sneak peek into what's coming out. I think it's a great course. I haven't spent a lot of time going through the course, but I've signed up for it, and it looks like a great course. So I'll definitely try to find some time to step myself through that. But at the same time, what I get from you, Adam, is that, you talk about, going on vacation and still having your fingers in the markets. So I just get you have a real passion for trading. You seem so diverse and balanced at the same time around all elements of investing and trading. It sounds like you've invested heavily in not just the technical analysis stuff, not just the quantitative analysis. I know you have a good understanding of the fundamentals as well, but you've also gone beyond that and challenged yourself to do some of that inner work we talked about already, right? I know in the past you've talked about stuff like meditation. You just brought up hypnosis and self-therapy and going to a therapist. I guess at the end of the day, what do you think that captures you so much with the markets that enabled you to kind of have such a fire for trading?
Well, I think my interest in hypnosis and meditation goes back to when I was in college, I was looking for ways to learn music more efficiently. And so I wanted to see if there's this really, and people who played sports experience the same thing. This is certainly not unique to music, but there would be times where you would have something that was a problem, like a place where I would consistently play a wrong note, and you kind of hear this inner dialogue coming up. It's like, okay, well, here comes that passage. Be careful. You always get the fifth finger tied up there, and you make here comes. Be careful. And then, sure enough, you make the mistake, and people do that in tennis and golf. It's just it's like. So I was wondering, is there some way that I can turn off that inner dialogue? And I knew that the times that I performed my best were times that I almost wasn't there. It's like I transcended in some way, which is kind of a scary word to use, I guess. But it's like I was just so much in the flow of the experience that I have no recollection of the details of what I was doing, but it happened. And so I was looking at biofeedback tools and different ways to try to be able to capture that more reliably. And so I guess it's just kind of an interest. I also, one of my degrees is in comparative religion, so I'd studied a lot of the practices that a lot of people, and you build a perspective on the range of human experience over a few thousand years of recorded history all around the globe. And you start to see some common ground, and you start to see that people are having these similar experiences. And what does this say? We can have an extensive discussion about what it says about reality, but what is it more practically? What does it say about us as animals, as processing machines? What is it that's in our cognitive machinery that makes us see, feel, experience the same things and vulnerable to the same kinds of mistakes? And obviously the markets are a great place to explore some of that. And so I think I brought that interest with me from my past, and it's something that continues to serve me very well.
Yeah, interesting. I think I have the same sort of interest because as you're saying that, I realized, we talk a lot about setups and that kind of stuff, but at the same time, this is my 10th year into trading now. What interests me most still is the human behavior side of it, more than talking about setups and triggers and risk management, stop management. That's all important, but just as a sense of what you're talking about, I that's kind of neat. I think that's kind of the driving social. When you feel that kind of social fabric and kind of what drives human nature, I think that's a very, very powerful element, and it seems like that's it's always interesting.
Well, it's interesting, and I think one thing that is very important to do for somebody who's trying to wrap their hands around the market and their head around the market is talk to people who have no interest or no involvement or no experience with markets. It's very interesting to have those conversations because they have this idea that what we do is very numerical, very dry, and very boring. And when I find somebody who's interested enough to listen to me talk about markets and my experience, invariably the answer that what I hear is, I didn't realize this was so creative. And I didn't realize that this is such a there's so much psychology and creativity that goes into it. And it almost seems to, so I tell you, you need to have a very disciplined approach with how you will get into trades, how you get out of trades, how you will manage the risk, how much you will trade. You need to be very disciplined with your own behavior. So all of this stuff seems to be very regimented and very prescribed, but there still is this element of creativity. And I think ultimately, we're trading. One of the aspects of technical analysis that I think has kind of faded away. A few years ago, there were a lot of books on the idea of you're not trading setups, you're not trading the market, you're trading against other traders. Right. And I think that's true. And I'm a little confused why so much of that kind of fell flat and isn't a message that people are thinking about more. But you're playing a game against a lot of really smart people. And you're playing a game, like one of the questions people ask is, why do I, and I remember laying awake at night, practically hitting myself in the head, asking the same question, how can I be so stupid? How can I make the same mistake? I know when this happens, I do this, but yet I make the same mistake over and over. Right. How can I how can I even remember to breathe as dumb as I am? And we you kind of get into this cycle. And so the reason is because the market, I think the reason is, my answer is that the market is the sum of a lot of human behavior. And humans make decisions. And so whether you look and you say, I'm going to push the button to buy right now, or whether you write a program that does it, you're still, even the program is still human behavior by proxy. So that humans make decisions based on some combination of emotion and reason. And I think there's a lot of emotion encoded in market prices and price movements. And I think the movements of financial markets are almost designed to cause those emotional reactions in us. So when the trader sits and looks at a chart and sees the market move and has an emotional reaction, that's not a defect in the trader. That actually says something very profound about what the market is, and about what that trader is, and about that trader's relation to the market. And I think when we understand that, then it's possible to, only through that, at least for me, only through that understanding was I able to step back from a lot of the emotional noises in the market.
Yeah, that's such a deep and beautiful way to lay it out there. It just reminded me of a book called Riveted by Jim Davies, where he talks about sort of the same ideas in terms of why human beings are so riveted by the social element. And as you described it, that market being just kind of that living embodiment of a bunch of human beings, we're just kind of drawn into it, right? Like, we see a certain type of price action, it's going to cause us to represent things as being, that's a human behavior or some sort of human output, and that causes me to react in a certain way. Right. So that just makes a lot of sense to me. So thank you for sharing that. That's great.
Thank you.
So let's just go back for a second and talk a bit more about that inner work. So I know you've written a lot about meditation. You have a great meditation, a guided meditation course on your website. I've heard you talk about it in other interviews. So what is it? You talked about how you got into meditation, but why do you think meditation can be effective to traders? What is it about the practice? And I know you've talked about how there are positive traits and negative traits to meditation, but let's just start with the positive stuff. Why do you think that's effective for traders? What does it do to us human beings?
I think it is, let's talk about the positive and negative together. I think that it helps us access a state of mind to touch a state of mind that we aren't normally that in touch with. And for those of your listeners who don't know, the idea behind most types of meditation is you're basically looking for a state of mind where your active thought turns off. And we could do an exercise like just try to sit and not think for 10 to 15 seconds, and you can't do it. You're thinking about what you have to do tonight. You're thinking about a project you have. You're thinking about some bill you have to pay. And it's very, very difficult to achieve a state of no thought. Yeah. But what people, and you might say, well, Adam, that's kind of stupid. Why would I want to do that? Why would I want to turn my brain off? And I guess what I would say in response to that is that there are experiences in this area of consciousness that for thousands of years, people have had very similar experiences and realizations. And it may, I would, if you think it's dumb, if you think it's a waste of time, I would at least encourage you to think that maybe it might say something about what we are and who we are, and there might be some wisdom there. So I think a lot of people talk about meditation for stress relief, meditation for clarity, and I think it's a little bit of the wrong idea to go into meditation expecting something out of it. And that's one of the challenges, and it's one of the, frankly, it's one of the big divergences between traditional thought, and maybe it's the thought of the East and the thought of the West. Like today, people, you're going to take an executive meditation course to get boom, 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 these results. Right. And you're going to do it in this structured, you're going to go through this. But, where if you went to a master and you say, how do I meditate? He would say, just sit. Mm-hmm. And most people, we can't do that. Well, yeah. What will I get out of it? Just sit. Just see whatever comes is right. Well, how long do I sit? Just sit. That's the answer. That's the answer to everything, and it's a very different way of thinking. And if you're a person who thinks there's value in different perspectives, then at least I would offer that it's a perspective you should consider. And you mentioned I have a little, I think it's 22 day meditation course that is actually one of the projects out of all the things I've done in recent years. It's one of the things that I think has come out the best. The format, I'm just delighted, and I'm delighted at the feedback that I've gotten. The format is, and you probably can tell from talking to me for half an hour here, I talk a lot. and often I will talk in sets of nested parentheses and qualifying everything. So I made a very conscious effort to not talk a lot. So what you get in each of these is a little mini, not even a lesson, but I talk for a minute and a half, maybe 2 minutes, and then there is an audio track for, I'm asking you to sit a few minutes, 5 minutes, maybe 10 minutes as we go further into the course to just experience different kinds of meditation. And there are a lot of different ways that people meditate. And what I've tried to do in that course is to show you a lot of different ways and to lead you toward the experience. It's not knowledge. It's not knowledge. It's the experience. And I've heard from people, one of the things that was most flattering, a monk contacted me, a Buddhist monk, who said, I sit in meditation for 4 hours every day, and I have for 20 years. And I've done multiple meditation retreats where I've sat for 20 hours a day.
Yeah.
Yes, for weeks.
Yeah.
And he said, your course is the best introduction I've ever seen for somebody to meditation. And nice. To hear things and to get feedback like that has just been overwhelming. Yeah. So if you're interested, and in fact, even if you aren't interested, I still think you should do it. It's right there. It's check it out and give it a shot.
And you said a few things that are funny there to me as you were saying that. I was just thinking, people, in the West we're so, I guess, accustomed to that kind of, risk reward, not risk reward, but I guess a ROI model where. Right. All right, I'm going to invest 30 minutes to meditation, so that's going to give me how much to my bottom line? How much is that going to add to my trading account? But like you said, it's an experiential thing, and people know what meditation is, rationally. They understand, you're supposed to be quiet, but until you actually do it, you cannot explain to someone how it works. Yeah, and
there are. And everybody has a different experience, and I haven't, and I won't really talk about some of the kind of more far out there experiences, but I certainly have had a few experiences that really point toward an entirely different level of experience, and that we may live a lot of our lives blind to, and this is a way. And I guess another thing that I should say is that this is a completely non-religious practice. Like people are afraid, well, if I'm Christian, why am I doing something that's Buddhist? Well, it's not. It's a technology, and I draw from a lot of traditions in my meditation work, so I can offend everybody equally with other practices. But really, what we're doing with that is looking at basically the mental technology that people have evolved, the tools that people have evolved, and it's just. It's something that is difficult to talk about because it transcends rational thought. It's another way of knowing. It's another way of experiencing. And by the way, I said we should touch on the negatives. I think the one big negative is to realize that this is not a cure-all. There's actually some evidence that meditation and being in a meditative state can impair certain types of learning. That there are certain types of learning that say the holistic inductive learning, where you're recognizing patterns and you can't even quantify those patterns. Meditation appears in many of the studies to help that kind of learning. And I would argue that kind of learning is very relevant to market intuition. However, if it comes to learning something like something very structured, like certain types of math, certain types of engineering practices, being in a meditative state of mind actually could work against that. So it's not and there's some other kind of weird things that can happen as you struggle with some personal issues through meditation. It's not a cure-all. It's a powerful technology that has the ability to make positive change, and of course, with that, it's like any medicine can have a negative effect if it's applied wrong. So it's just something that deserves some respect.
Yeah. And so can you share your meditation practice? Do you have one today? Do you still meditate on a regular basis?
I do. I do two types of meditation, and I don't force it. I used to set a timer. My practice is anywhere between half an hour to an hour and a half, sometimes in 2 sessions. And I do I do some mantra meditation. I do a lot of just kind of empty mind meditation, focusing on the breath until the mind quiets. And there are a couple of visualization meditations, and I share all of these things in the course that have been very, very helpful to me. But the mantra meditation in particular, I find it's maybe the quickest way to snap me into the state. Maybe that transcendental meditation is a term that a lot of people know and talk about, and that is you don't need to take a TM course because it's mantra meditation, which you can learn a lot of different ways. And I think maybe that's why that has been so successful, because it is very powerful, and giving the mind a sound to focus on, or a set of sounds, can really help to focus the mind and tune out a lot of that noise. So I do think that it is pretty important to posture matters, because one thing that you'll find when you sit in meditation is you have all these weird aches. Like it's like, why does the middle of my chest hurt from the way I'm putting my arms? So you have to figure out exactly how to sit, how to find the right posture. But once you do that, and again, people figured all of this out a long time ago, and there are meditation cushions that the one I use one that's filled with buckwheat husks, which is a traditional Zen cushion. It works very well mechanically, I think, and so that's in a way, it's not that exciting to talk about, because you sit and don't really do anything. But I do think it's a very important practice. And don't be intimidated by the time. Somebody who's not meditating, if that person could sit for 15 minutes a day and work up to it. And initially, 5 minutes feels like an eternity, but you can get significant benefits from sitting 10 to 15 minutes a day.
Yeah, absolutely. And a previous guest on the show, Brad Jelinek, he shared a really good book on meditation called The Untethered Soul by Michael Singer. It's a great book for those folks out there who want to dig down. It's not too steeped in science, but it's a really great story and very thought-provoking around what meditation does and kind of where that voice comes from. That voice that's always in the background, that monkey brain. But meditation for myself, just going back to trading and how that relates to me, and it's like you said, you can't really draw one-to-one comparisons between meditation and what you're going to see in your trading, but it just extends to your life. Like you said, it's a powerful drug that's going to have effects well beyond just your trading or just whatever you're trying to apply to. I just find for me the biggest impact has just been that feeling of more spaciousness. So just having the ability to create those little moments of space before I'm going to make a decision, for instance, in trading. Right. Or if I'm gonna explode at my kid because my son because he's on my last nerve, and then just having that little bit of space before I go off the deep end, I recognize that's from meditation. So I think for me that's where it's powerful.
Well, the perception of time is very interesting. I do think there is there is something to that, and like one of the very interesting things, and I think it probably comes from day trading for many years and watching 1 minute bars, is that more often than not, I know what time it is to the minute. Like we can be standing in line someplace, and my wife says, "What time is it?" And I say, "Oh, it's probably about 4:17," and it's 4:17. But you also have a like a short moment can seem like an eternity.
Yeah.
or you can have an entire day that goes by. So that's something that interests me very much, is this perception of time and how to manipulate this perception of time, because I think a lot of the pressure that we feel comes when this perception of time is a little bit out of whack.
Right.
And if you think about being under pressure, you think about some of the bad decisions you've made, it's like this constant feeling of you don't really have enough time. Where if you kind of center yourself, and it can literally be as simple as closing your eyes and taking a deep breath and letting it out, and you control your it's this connection between body and mind is very interesting, because when your mind gets crazy, your body gets crazy, right? Your body shakes, your breathing gets crazy. But what we find is, if you can control the body, you can control the mind. So if you can slow down the breathing, if you can calm the body, it will calm the mind. And so just sometimes taking that breath can put you in a completely different mental state.
Mm-hmm. And I just took a deep breath there. It feels better now.
It works.
It does work. So you mentioned biofeedback before. What have you tried around biofeedback? I was a big fan of HRV, and trying to use heart rate variability to play around with that and see if I could incorporate that into mindfulness. But have you tried any kind of biofeedback like HRV or anything else?
I've done a number. I actually don't even remember when I got interested in all of this stuff. I offered myself as a guinea pig for a lot of psychology experiments. I did a lot of biofeedback stuff, a lot of skin. What's the word? The skin resistance, breathing, heart rate. I did also some work on my own a little bit more recently with some brainwave machines, and you begin to see that all of that is not quite as simple as people talk about. Say the brain goes into theta waves well, actually, there's a lot going on in the brain electrically. It's a lot more complicated, but and it's very interesting. People talk about like alpha wave state. Well, I can tell you how to achieve an alpha wave. You close your eyes, and your brain, and so you see that with the machine. It's interesting to me. It was a little bit difficult to carry those lessons into to apply the tools of biofeedback outside of the biofeedback thing. I think there are in the meditation course, I talk about some things like some of the hand positions, mudras, in meditation, where for instance, you might just very lightly touch your thumb to your middle finger when you sit. That's a biofeedback method in itself. And what you will find is, if you lose focus, your fingers will start pressing together or they'll come apart. And you can also use something like that to kind of monitor your state. For an intraday trader who's exposed to stress, something like that can be a very simple tool. So, short answer is I've experimented with it. It's interesting. I think it works for some people. I know that there's some good work being done in sports performance with biofeedback. It's probably not something I've done enough work with, just to be honest.
Yeah, no, that's fair. And what a great little tip. I'm going to have to remember that one. The thumb to the index finger, is that right?
In any finger, and the idea is that when you, and if you read a lot of the old texts, it's like they think that there are things that go on energetically in the body. And, we can have a debate about that. I don't know if it's true or not. I can't prove it. It doesn't matter. But because what really does matter, if you do that, if you imagine basically lightly holding a sheet of tissue paper between your fingers, and if you maintain that spot, that focus can become a spot of focus for meditation. And when your mind wanders, your fingers will start to do strange things. So it's kind of a cool tool.
Yeah, absolutely. It definitely draws a little bit more of consciousness to what you're doing. So yeah, that's a good one, a very good one. So we've really covered a lot of stuff already, but I have a ton more questions to ask you, but I want to be respectful of your time. It sounds like you have a deep background, or starting off in day trading, but you took it upon yourself to learn math and to get into the world of quantitative analysis. What drew you in that direction? Why not just stay with the principles of day trading? What was working with your day trading?
Well, I really wanted to understand my edge. I wanted to understand how stable it was. And I knew that there were all of these people who were doing all of these quantitative things that I didn't understand. And I thought that there might be, I basically didn't want to be at a disadvantage. And that was back in the day when the neural nets were still, that was going to solve everything. And now we know that's not, it's a great way to curve fit if you want, but it's not so practical going forward. So I just knew that there was a way to understand the market, that I did not have the tools, so I had to get the tools, and I saw no reason why. I couldn't come up with a convincing reason why I would not do it, and it was also a little bit of cynicism because I saw people talking about things that. And there was a time when I was heavily into. I did all of the GAN stuff, I did all the Elliott wave stuff, and at some point, I kind of thought, how much of this stuff actually really works? Right. And I did you'd hear about all these people making, you can always hear people in chat rooms making money off of whatever. And somebody was talking about how price always bounces from the 20-period moving average. And I thought, well, does it really? And then I went back and kind of did a little, my first back testing was by hand. And I saw, sometimes not. And so then you have to have the statistical tools to look at data, and I think it's not just like taking a class, because you have to go to the next level where you have some intuition. And it's one thing, like there are a lot of people who can tell you the formulas for a PDF and how you understand, but it's another thing to know what does it mean that I'm working within this probability distribution, and what does it mean, how likely am I to have a good result or a bad result? How likely is it that my good result is just due to chance? And you start to realize how many errors people make just due to like little cognitive quirks. Like people are so determined that these lines mean something on charts. And we can test that. If a line means something, then you should be able to tease it out of the data quantitatively. And all of these people who talk about these secret levels or even the Fibonacci ratios, I am not aware of, and maybe I'm just not aware, it's certainly possible, I'm not aware of any test that shows a statistical significance to a Fibonacci level. But yet all of these people say you can't argue with math. It's like here are the stop at the 161.8 blah, blah, blah retracement level. Well, you just draw any line on a chart, and because of the way we process patterns, it will look significant to you. Right. That's one of the as I've gone through, and I don't really want to be in the position of debunking a lot of things, but that's the position I've accidentally found myself in as I've gone through. I remember there was this technical indicator that a lot of people you would hear people making so much money with it, and it didn't work when I tried to use, and I knew the developer who was also not able to make it work, yet there were all of these people who were supposed to be using it, making money, and supposedly somebody had done an extensive back test. And when I finally tracked down the person who had done the, quote, quantitative work, and I will say quote to make sure you hear the word, the quotes around that word, all he had done was wrote a study that plotted it on a chart. So you could see, well, here's where it happened, here's where it happened. And I said, well, yes, but what happens? And he's like, well, can't you just see that it works? No, you cannot. I can certainly find examples where it works, but what happens over the course of thousands of trials? Right. Does it work more? Literally, the question is, does it work? Does it work more often than it doesn't, or does the distribution of returns after it occurs, is that in some way favorable to a trade? Does it look somehow different than a coin flip? That is the question, and it's a simple question, but it turns out that you need a fairly good working understanding of statistics to be able to ask those questions and understand the answers. And I didn't have the tools, so I had to get them. And really, I think there's so much good material out there for free. There's so many university courses from top-notch schools. You can buy a textbook and teach yourself any of this stuff with a little bit of dedication. And I think that, so many people spend time learning the magic indicator crossing the moving average system when they probably should be learning probability. They probably should be learning statistics rather than figuring out what to do when the RSI goes below 34.
Right. And so how does that role of intuition, then you kind of brought it up, so where does the role of intuition kind of fit into that? So is there a way that intuition layers into trading with that quantitative approach and without it?
Yeah, I think it's very important. I think that the thing about intuition is difficult because my theory, at least, is I think intuition, here's why it's so hard for beginning traders. Intuition communicates to you along emotional channels. People talk about feeling something in their gut or having a feeling in their body. People experience intuition in different ways. Well, that's also the same channel that your nerves speak to you on. And when you have so much other stuff going on in your body, you can't listen to that still small voice of intuition. So it's part of it, I think, is the beginning trader is not very well positioned to use intuition because, first of all, he has no reason to have intuition. Intuition is the result of seeing a lot of data, seeing a lot of market situations, and beginning to kind of get some sense of what usually happens. That's really what intuition tells us. So this idea that somebody is going to have no experience with markets and just have some magical market genius, maybe that happens. I don't think it happens. You have to be careful to say never. I think really intuition is somebody that's seen a lot of stuff and is able to process on some level that goes beyond rational thought. But also that beginning trader, not only does he not have that well of experience to draw from, but he also is very noisy emotionally. And he has all of this stuff going on in his emotional state that makes it even more difficult. So it's like all of that has to be dealt with before intuition can be valuable.
And my thoughts around that are really kind of tied to, kind of Daniel Kahneman's work around, in his great book, Thinking Fast and Slow.
Yeah, it's a good book.
Yeah. Until traders can develop that, like you said, that depth of experience, you don't want to be using those heuristics that are based on, just small sample sizes. You can't really trust those until you have, a great deal of experience that's positive,
right.
that's formed into kind of that system one thinking that you could trust.
Right.
You probably don't want to believe a lot of your intuitions until you've had a fair
very,
amount of
very
experience. True. So that's a very, very good point. So just maybe a couple more questions before we wrap it up today, because I want to be respectful of your time. We talked about performance before. What do you do to get the best out of yourself? Because you're very, very productive. I know you spend hours a day. I know you have a very good process in terms of reviewing charts and staying on top of the markets, and blogging and writing and sharing. So how do you stay so productive? What are your keys to being so such a high performer?
Well, I think part of I don't remember where I read this, but it's easy to think you have writer's block and to say I really can't write. And I think I was reading. I should find out where this is from, but somebody said that his father was a truck driver, and he never had the luxury of having truck driver's block. Right. So if your job is to write, if your job is to produce content, then you write. That's what you do. And I certainly know when I go back and look at what I've written that some days are better than others, and some days what I write is mostly garbage. But you still and some days it's okay. It's pretty good. So you and that's the way I wrote the book. I wrote the manuscript in less than 3 months, and it was it was a 950-page book, which we only ended up publishing half of. And I basically just made myself do it. I think it's also important. You find some time to recharge. You take walks outside. For me, cooking is kind of therapy. Like your hands are busy, the mind kind of shuts off. So I do little things like that. It's just a matter of kind of understanding what you need, and I don't think there's anything that I can tell you that anybody else can apply. But I just basically I make myself work and then take appropriate time away. And every now and I don't need a lot of sleep, so that's one thing that also helps. But you kind of try to listen to yourself and respect your needs, I guess.
Yeah. So Adam, you have a very storied journey with trading. So a question I'd like to ask all my guests is around, if you had a chance to go back to your younger self and give that 20-year-old version of you a piece of advice, what would you tell that person? Would you change anything?
I probably would. I mean, it's like you go back in the time machine and step on an insect in prehistoric times, and we all evolve into tentacle. Who knows?
Right.
So I probably wouldn't really change anything. I mean, my journey was not a straight path. There are times that I definitely wish that I had a little bit more of a formal finance education sooner. But really, I think my journey led me through some kind of interesting paths, and I'm probably better off for it. So I don't think I would change anything.
But any advice you tell that person? Something to pay attention to or do less of?
I would just tell them they'll figure it out.
Great answer. So, just one last question before we wrap things up. So, right now we're in a pretty volatile market. This is folks who are listening. It's Thursday. On Monday we had a pretty steep sell-off, which is Thursday the 27th today of August. If you're talking to a struggling trader out there who's having a real difficulty with these markets or with these conditions, what kind of advice would you tell that person?
Well, I mean, you're seeing some market action here that is in the 99th percentile historically, so you're seeing some extreme markets. In some sense, though, extreme markets are normal. Like I think here's a quantitative lesson that has very practical applications. People talk about fat tails. So you have more, and I think most people know what that means, that you have more extreme things, both good and bad, that happen in markets. But people don't realize the other lesson of the fat tails, which is where does the weight come from?
Right.
And it comes from the shoulders of the distribution. If you don't know what I'm talking, most people probably do, but you can just Google and see. So what this means is that markets are more boring. There's more stuff in the middle of the distribution, meaning there's more quiet, boring days, minutes, hours, trading results. And then there's also more extreme things than we would expect.
Yep.
And that normal curve, the bell curve, is kind of a good, maybe a good touchstone for intuition. So you're going to have a lot more crazy times and also a lot more boring times than you might expect. So in some sense, these extreme market conditions, while they are by definition rare, are a core feature of markets, and you need to experience those. And I think until you live through experiencing, I don't know what the answer is, maybe about a decade of market data. Yeah. And I don't mean going back and doing research. I mean living through it.
Yeah.
It's a very different thing. And I think you get a level of understanding that can't really come any other way. When somebody introduces a senior trader who's been trading for 2 or 3 years, I don't really know how valid that can be, because you need to see all of these market environments, and this is a market environment that you haven't seen before. Well, it's a market environment that nobody has seen before, but it's also it's kind of the paradox that every moment in the market is unique, and it has never quite been like this. But within that kind of crazy, frothy, whatever, there's also regularity, and that uniqueness is the regularity and the rhythm of the market. And I realize I just said something that sounds like a fortune cookie, but but I think there's actually some truth to that. And so you just don't expect to be able to handle it. Don't kick yourself for losing money. Next time something like this comes along, you'll be a little bit better equipped to handle it.
Yeah, what a great answer. Yeah, until you've gone through a few of these market cycles, you really don't know how you're going to react.
Right.
So you can have a very defined trade plan, but the reality is that when the crap hits the fan, you really don't know how you're going to react until you've lived through a number of them. So,
Right.
like you said, experience is sometimes the only teacher.
Well, and reduce position size. I think that is part of the answer. And again, let's just put numbers to it. Let's say you're trading the S&P futures,
Yeah.
and you have a $5,000 account, and I think that is a pretty good recipe for failure.
Yeah.
Right? But there are a lot of people that are in that situation, and you can't trade this kind of market.
Right.
Because if you're normally using, and again, I'll just make up numbers, you're normally using 2 or 3 point stops, and then you need to widen those stops to 10 to 15 points.
Yeah.
Well, you can't do that. So maybe you need to step aside. If you can reduce positions, and of course, different instruments get position size. Different instruments give different possibilities. But the market, as the market becomes more volatile, you can reduce your position size so that your P&L doesn't become volatile.
Yeah.
And if you're that beginning trader and your goal is to make, and I don't know how valuable it is to have goals. I think it's a questionable thing, but let's say you want to make $100 a day. You don't look at days like we've had and go, man, those were crazy days. I should have made $2,000.
Right.
No, what you should have done is reduce your position size so you made $100.
Right.
So you're keeping everything proportional. And the reality is, if you're at the more beginning stages of that developing trader roadmap, you're probably going to lose money on a day like that. But let's lose $100 instead of losing your whole account.
Right. That's great advice. And I'd love to get your opinion more about goals, because that sounds like a very interesting topic, but maybe we'll have to leave it for another day.
Okay, sure.
But again, Adam, thank you so much for your level of engagement, all your contributions to the trading community. What's the best place to stay connected with you? So where can people follow you, get engaged with you, and so on?
Thank you. Sure. So start up my blog, which is adamhgrimes.com. And the blog links out to my trading course there. I gave you the URL for that, but it's just easiest to find from the blog. Follow me on Twitter at Adam H. Grimes. And if you're interested in seeing my research, I'd love to have you take a look at it. My firm is Waverly Advisors, and you can also find that conveniently from my blog. So, check me out. And I try to be very responsive to messages. So, feel free to hit me on Twitter, drop me an email. A lot of the ideas that I have, and also check out the podcast, which guess what? You can find from the blog. So go to adamhgrimes.com. A lot of the blogs that I've written, a lot of the podcast episodes have been generated by reader questions and reader ideas. Yeah. So I don't care if you have been doing this for a month and you think your questions are stupid. Your questions are not stupid. Your questions may be basic. Your questions may actually be quite advanced, but your questions are certainly questions that other people have, and they're valid questions. So, I love interaction with my readers, so please feel free to reach out.
Cool. Well, thank you again, Adam. It was a real pleasure to get a chance to talk to you. Really appreciate
You're welcome.
your time
You're
today.
welcome, and thank you.
All right. Take care.
You've been listening to the Trading Edges podcast.